Thank you, everyone. First of all, let me thank PMS Bazaar for giving me this opportunity. From macro of discussions, now it's time to go little on the micro side. As the title of this event is Accelerating the Alpha. So when we say the accelerating alpha, people normally come to us as a fund manager and ask our top holdings or top sectors where we are looking for. And it has been observed that every new bull run has a new leader. But when we say that our large exposure is into the industries or companies which are traditional in business, like today we are having around 12 to 14% exposure to textile. People or investors are looking little, they are kind of skeptical that, okay, you are not investing into EV. आप बताओ EV में आप क्या देख रहे हो? So I thought this is a good platform to have some brainstorming session where we can say that, being a conservative valuer, we have around 75% exposure to small cap. And in small cap, being a conservative valuer, how do we analyze the company and how the old age businesses are creating new moats. So today's agenda is, understanding the old age business, new age business. What makes old age business very attractive, triggers for it, and one case study. These are the disclaimers, the name of the companies or the industries that I may speak. So we may have our investments into those sectors or companies. First is, some example of new age companies. So these are the list of companies like First Cry, Swiggy, Ola Electric, Paytm. So what are the common characteristics? Let's see, the common characteristics is seen as very innovative. Fintech companies, everyone know that, UPI, how it helped to transform the Indian journey. Disruptor, DeepSeek, what we are seeing right now. Usually they are tech-based, futuristic, because many of the companies, or particularly where we see these new age companies, they are seeing that, okay, what can happen in next decades. So they are discounting 2035 or 2040 in today's terms. And though they are asset light, we believe that, okay, they need cash. That's why they are raising the capital. In older times, companies used to raise the capital for the kind of, construction of their assets or, developing the assets. While many of the time, currently, though they are asset light, they are using the cash or generating the cash or raising the capital just to burn it or repay or give exit to the angel investor. Versus what is the old age business? Like where we, when we say old age business, what are the sectors that comes into our mind? Cement, textile, power, thermal power, not that electronic or the solar, etc. So these are old age businesses. Now their character is nothing new. So that's why they don't fetch high valuation. When you are giving high valuation, you expect the higher growth. So these old age businesses are normally considered as a slower growth, companies with a very slow growth, high capital intensity, high capital intensive, and uncertain future, because some may think that, okay, this may be easily replaceable or they don't have any competitive advantage. We beg to differ on those points because textile is not even decades old, centuries old business, it's still there. Cement, also century old business, it's still there. Everything that we say that those are old age businesses, but they are survival not only of the decades but out of centuries also. So why do we have to go, what we are looking for, at least because investment is always individual's call, and how do we care PMS analyze these old age businesses? So, pros of old age businesses is one of the best is, they are having ready-made their cash, their demand or market is very well established. The most important, at least as a fund manager or as a, as an analyst, what we look for is the cash flow. So profitability is there. While if there is no innovation, there is growth will be missing. So they traditionally, or even in current market, many of the old age businesses are growing in the lower single digit. While we get, all the new businesses, new age businesses, they are growing at first much faster, higher double digit, or even into 40s or 50s times of their, top line. The negative side of the new age business, as far as at least Care PMS is concerned, is their cash burning and no history. So they don't have the proven market. They are still exploring. They are just doing trial and error. So this is somewhat giving us discomfort. This is Warren Buffett's famous quote, our buying preference runs towards business that generates cash, and that is what Care PMS also believes in. What makes old age business, the new attraction, at least for Care PMS? One of the most important thing about these are their brand value. Some case studies I will discuss here on. So I will be discussing one company called 𝐼𝐴𝐻𝐻 Limited, which is 9 decades old company. I think any Indian would be aware about the brand 𝐼𝐴𝐻𝐻. Similarly, 𝐵𝐴𝐻𝐻, HMV earlier, so those brands are not new. So many of the new tech business are spending crores and billions rupees only onto creation of their visibility, while they already have the visibility available. Similarly, they have that existing cash flow. So our call is quite simple, because we know in the worst case scenario, at least this much, the protection is available. Company will at least make this much money. Our call is more towards now than on the management side, that how management is allocating these funds. So that is one thing. The third important point is entry barrier nature. The kind of this old age business, like, 𝐼𝐴𝐻𝐻 established 9 decades old, the kind of their real estate they are having, their machinery, plant and machinery at the sunk cost. On balance sheet, it is a sunk cost, but still they can, they are able to generate money and revenue out of it. So we believe that replacing those companies with that kind of setup in the geographical or the machinery advantage, it is make them quite attractive. And as I said earlier, it is the valuation, because people try to give more in the bull market particularly, people try to give more weightage and more valuation to the companies which are having far more growth on the top line and negative bottom line. While as a conservative valuer, we prefer to give at a good valuation to the companies which are generating reasonable cash flow. Identification of the trigger here, in old age business is the most important for not old age business, for any company in the world. Anyone, any analyst or any fund manager would be has to be comfortable on the fund manager or the management of the company and their thought process. So that is one of the key important trigger, and through live example I will share with you how the thought process changes the company. The change in industry dynamic, how they are adaptable to the changing in the industry dynamic, or how much they are making it a first timer, first mover advantage. They are taking first mover advantage with change in that industry dynamics. The third and the most important part is capital allocation, and the fourth is existing asset class. Here I can share one example, like 𝐵𝐴𝐻𝐻, the name I spoke earlier. They are having catalog of around 1,60,000 songs. So in an 1,60,000 songs, if you want to generate, say today in particular year, in 1 year, India, including Bollywood and all the regional players, they are creating somewhere around 5,000 songs. Okay, of these 5,000 songs, Say the best player is having 25% market share. So they will be getting somewhere around 1200 or plus kind of songs. To create a library of 1,60,000 songs, any player, if they want to build it today, they will require at least 100 years. So that is kind of the catalog, the existing assets of these old businesses which are into business from many decades are there. Now moving to the case study, I will prefer to share more time on the case study because that is where the actual things happen. These all are theory. Now it is about the reality. The textile case study, textile, as I said, that everyone was thinking that this is a old age economy, nothing new. So I have taken 𝐼𝐴, where we have still invested and we have made very good money. Even after the correction, we have almost 3 times of our investment. So 9 decades old company. In 2010, they initiate to diversify their business from pure textile mills to somewhat into garmenting, and thinking of increasing disposable income, they brought in many of the franchisee model like Tommy Highflyer, Nautica, LA. They brought them into India. As you can see, the 𝐼𝐴 traditionally was into denim. They are the largest denim manufacturer of India. Woven, they are mastery. Garment, they started in decade old. The most important part is the new, because they were having already, they know the process, they know the machinery, they know how they know how to make clothes or this yarn, how to process yarn. So how they engage their existing knowledge and the assets is they diversified into new age, new age segment. Last year, everyone was talking about the railways. Okay, so they wanted to have a direct exposure to the railways and defense of India. While 𝐼𝐴 is playing very significant part in the Vande Bharat by supplying their sleepers to the Indian railways. So this is also indirect play. This is not niche. People will say that, okay, this is textile company. We want exposure to the new age railways, but this is what they have created. What changed? The focus. As I said, the promoter and their focus. They went from the traditional textile business. They realized that, okay, now India becoming innovation hub. Let us diversify. Let us encash our knowledge. And they went into human protection, composite, and industrials. These all segment, why they moved and how this has impacted financials, I will cover into next few slides. Management, as I said, that most important part, Puneet Lalbhai took over the charge and in 2012, and he spearhead this new AMD division. They called it Advanced Material Division. Now the textile industry was only 200 billion, and 𝐼𝐴 was already present there. While technical textile industry, which is globally at $100 billion, that was untapped market. And that's where, their focus went. And total, they created almost 50% of their market, addressable market, expansion of their addressable market. The most important part, again, is the cash flow. This is last 5 years data. But if we go beyond that, so let's say from 2010 to 2018, 50% of their cash flow went to repay the debt. While change of the focus of the management, they reduced the debt, they went for the capex, and then there are some other ancillary expenses. So this is how change of the business mix changed the, change about the company's asset allocation, and that is how will be reflecting in the financials. This is the capex cycle. I can quickly pass through this. See, these are the financials. That is most important. If you see the traditional textile, business, there has been negligible growth in last 6 years, almost 0%. However, the AMD, Advanced Material Division, where company changed their focus in 2012 onwards, it is growing top line by 20%. And that is what I think everyone is looking for in new age companies, that what is their top line. For us, it is beneficial because with the top line, they are also making more on the bottom line, and that is how their EBITDA has changed. Their EBITDA, while textile division has been negligible, their AMD division EBITDA growth is 28%. From losses of 7 crores, they are generating 22 crores they have generated in EBITDA in FY24. So if you have to compare this part with the the cash burning new age companies where there are still EBITDA negative even after having into industry presence from last 5-7 years. Here is the most important part because as I said in my early remarks that we are very conservative valuation. So how do we analyze, how do we protect our downside? And that has actually helped in our current correction as well. So even if today's market cap, total market cap of Arvind is somewhere around 8,000 crores. Out of this, if I give the AMD, the Advanced Material Division, where the company has diversified, the 40 times of their, 40 times of their EBITDA earnings, their market cap itself is 6,000 crores. So my old 9 decades old company is coming available for me absolutely free. So this is something that value has been created by just looking into the factors of new technology of old age businesses. Now how the value unlock happens. So these are now all the AMD division, the companies into consolidation, they will be consolidating all their advanced material divisions into one and create one subsidiary, 100% subsidiary. This is also very interesting to know that being a small cap focused fund manager, we try to gauge the things earlier and later on when the story plays well, this is how you see the institutional interest comes into play. So institutions has increased almost in last 1 year. They have increased their holding in this company by almost from 24% to almost 40%. And the most important part is the valuation re-rating. Because we played very well on the valuation part and we understood the company, how they will be fetching new valuations, it is matter of time, just we have to be patient, and how the valuation got re-rated. When we started buying this somewhere around at 15 times of its earning, when my whole textile company was available for the free, and today even after the correction it is fetching at 30 times of earnings. And as I spoke with you earlier, the AMD division is still available at only the valuation is fetching the AMD valuation, which is growing at 20%, 20%. Second case study, I will give it a skip. I spoke with you about the 𝐵𝐴. From transition from the catalog music company to whole into entertainment industry. Even so, these are some transition. I will give it a skip. 𝐵𝐴, as I said, 1,60,000 songs catalog, and how much it takes to create this kind of asset. We identified this opportunity in 2017. Vikram Mehra's con call. Vikram Mehra was newly appointed MD there, and he said that our biggest asset is our IP, 1,60,000 for catalog, of which we have written down everything in the P&L. So however we can engage those, those songs goodwill, it will directly add to the bottom line, and that has actually happened. Lately, they have diversified into many other things, like some of the acquisition. They went from the only pure music play to the OTT and to the what we can say, live concert, Coldplay fever in India. I think you must have heard of it. But Diljit Dosanjh, they are the manager of 𝐵𝐴 is manager of Diljit Dosanjh, and they created around 280 crores in last 1 quarter only of the revenue. So friend, this is where we have entered in 2020, around 43. Even if today's market we are sitting with the 10x and quite comfortably seeing that all the stories playing well. Few more example where CARE PMS played, like observing JK Paper, one of our largest holding, diversifying from paper to packaging. DB Corp, this is also very much interesting company, because newspaper, I think everyone is aware that okay, newspaper abhi kaun padhta hai? No one is reading newspaper. However, people are right now ignoring their age on the digital side. They are having around 40 million subscriber, and they call it active monthly user, AMU. While next best, including 2 of 𝐼𝐺𝐻 and other things, they are having less than 1 million. So this is the the gap they have created. It is just a matter of time when they will start encashing those database. 𝐵𝐴, I spoke, Dodla, these are some of the companies. So key takeaways, when you come across some of the investment ideas which are into old age business, please don't write it off. There may be some interesting new stories happening. Watch out for the right triggers. That is actually that's why an investor pays to us. That is the job of the fund manager. And identifying the right triggers, and how the capital is allocated, and the balance in the portfolio, because you get some triggers of the industry level as well, and you identify good investing company, you can invest into that. So with this, I just conclude this with my closing quote. If investing is entertaining, if you are having fun, then probably you are not making the money. This is more related to, because when we share the ideas of textile or paper industry, people say, yaar, EV mein kya dekh rahe ho, or defense mein kya dekh rahe ho. So those are the quote. Thank you very much for patient listening up. Thank you very much. And once again, thank you PMS Bazaar for giving me this opportunity.